and welcome to the show. Today we're discussing financial goals, but before we get started, full disclosure guys, just want to say that nothing you hear in today's show will be financial advice. If you do want to talk to a financial advisor, then head over to unbiased.co.uk where you can find a financial advisor in your local area. It's also worth saying that we are talking about investments. Investments do carry some risk when you're investing your money in the stock market, so it's worth thinking about that before you start your investment journey. Well, today my guest is Lynn James, who is also known as the financial blogger Miss Mummy Penny. Welcome to the show, Lynn. Thanks for joining us. I am going to start with a personal question, if I could, and get right in there. Can you tell us about your financial goals and how you came about setting them?
I will indeed. Thank you for having me. So my initial financial goals is to pay off some debt that I have in my name. There's about £9,000 left to pay off there. It's all on 0%, so that means that I'm paying off debt, but I'm also stashing money away into savings, and I'm also putting money into investments as well. So that's my short-term goal. Long-term goal, it's to have financial freedom. It's to invest in my business, and it's to put money into pension and investments to make sure I've got enough money for a point in time, maybe around 20 years down the line is what I'm thinking at the moment, where I want to have enough money to be financially free, not have a mortgage to pay, and to have enough money set aside to live the life I want.
So in other words, you've got sort of short-term or medium-term goals and a range of longer-term goals, and it sounds like you've got different strategies to achieve those.
Yeah. And it's the initial goal is to pay off that debt as quickly as possible and just be free from that sort of tie around my neck. But I do think it's very important to have money going into investments as well, because I've got debt that's 0% interest, and then I'm earning money from the investments I'm making. So I like to have a balance between them and know that there's some money creating value as well as some money paying off debt as well. And
have you thought about how you perhaps use some money for investments and money for other things? Do you have different types of strategies for different types of timeframes?
Yeah, so this is something that I'm concerned about, that I don't know if I've got the right balance, which is maybe something we can talk about, is so I've got money in lots of different pots. So I've got, and I don't think the pots split evenly enough at the moment, and I know there's no real way as to how you should split our money, but most of our money at the moment is tied up in property. I've got a portion of money in pensions, and then a relatively small pot in comparison in investments, and it just feels not right. There's just too much riding on the property, and what if something happens there? And it's I want to spread the risk across all three of them.
Yeah, I mean, I guess that's sort of diversification, portfolio diversification really, is not putting everything in one place or getting the balance too much in one place. Do you hold cash as well for those kind of short-term things? Yes,
I've got some emergency fund cash, but it's not a huge amount of money. And the other thing I have is, at the moment, I've got some debt. So, but it's 0% debt. So what I do is I actually pay off some money into the debt, and I also invest money as well.
Right.
Because I figure I'm paying off debt at 0%, but yeah, I'm getting a pretty good return on my investments. So that's my reasoning, that I want to cover both of them.
Going back to the goal setting there, how did you come to that goal in the first place? What was your sort of thinking?
I suppose it was the thought of not wanting to rely on having to go out and earn that money. I want to just have that money set aside to live off of.
But do you see yourself retiring early, before the sort of state retirement age, or is that, do you think that's unrealistic?
I think about this a lot, actually, particularly my industry, because being a blogger, it changes all the time. And,
right.
and I think, is it still going to be the same industry in 5 years' time? What will it be in 10 years' time? So I'm always sort of thinking of moving with the times. And what if I ever had to go back and get, a traditional employed job again? So yeah, I suppose it's just building up that safety fund that I don't have to rely on anybody else to supply that money. And the other thing that quite a personal thing as well is my parents died when I was quite young, and I don't sort of have any other sort of resources of things to rely on, and they died not leaving that much money as well. So that taught me quite a lesson.
It's about the self-sufficiency thing.
Yes, very much so, that I have to have this pot of money set aside because the buck sort of stops with me.
Is that self-sufficiency thing extended to when you're thinking about investments, researching your own investments, or have you taken sort of professional advice in that process?
So how I deal with my investments is I've put money into, I've gone through a questionnaire and it's assessed my risk levels, and I knew that I wanted to put money aside for at least 10 years, so I've ended up choosing a very risky pot of money, which I check every month, and it seems to be going up. So maybe I shouldn't be checking it every month. But
I was going to ask you that, how frequently, because obviously these goals you're talking about are long-term goals. I suppose there's sometimes that temptation to sort of check how you're doing on a short-term basis.
Yeah, and I can check my pension as well. I can check it whenever I want, but I check that quite a lot as well, because maybe it's the financial reassurance side that I know I've got that £50,000 sat in my pension pot. And it was quite interesting looking at it this year, because it did actually dip down quite a bit, and now it's started to go up again. So it's just that peace of mind that I've got that money sat there, and that's locked away to a certain point of time. And then my investments, it just makes me feel good that I can see it growing and growing. And
were you worried when that, I mean, I guess we're talking about sort of February, March time, when the market had a real wobble and lots of things sort of came off in price. Did it worry? Did it make you think about changing your goal or changing your strategy? What
it makes me think of is, I remember one of my friend's parents, they were very, it makes me think of retirement age. So they were very highly invested in one particular equity, which was Royal Bank of Scotland.
Right.
And we know what happens to the Royal Bank of Scotland. And so they had a lot of shares that literally dived in value by, I think they went down to maybe 5% of what they were worth.
Heavens.
And my friend's parent was of retirement age. So it was at the exact time when they needed to start pulling on the money, and it dived down in value. So I've always sort of got that thought in mind of, oh, if I needed to draw on this money right now, then I'd be in trouble. But having it in a well-diversified fund, it should be.
Yeah, I think there's two things there. There's one is the diversification of the investment itself. So as you say, you're not relying on a single company's fortunes, however great that company may kind of appear at the time.
Yeah.
But also, I suspect sort of wealth planners, financial planners will probably tell you that as you near that retirement age, then you're sort of switching away from the sort of riskier portfolio into things that are perceived to be less risky. So holding more cash would be a good example of that. You know, cash obviously has a value. It changes with the value of inflation. You may or may not get interest on that cash, but of course, it's not going to be volatile in its value like an individual.
And you can get it exactly
straight away.
When you need it.
Absolutely. So there are definite benefits to holding that as you kind of near retirement, which is kind of why I was getting at the point around goals, really, because if you've got an idea of when that money needs to be available, you can sort of manage your portfolio and your the balance in your portfolio towards that date, really. So sorry, you're going to say?
I was going to say the other thing that is on my mind is having some money set aside for when each of my boys reach an age where they need a chunk of money. Because it's something that
is that university type things, or is that house?
Yeah,
or?
It's around the sort of age of 18 to 21 when I think I didn't have that sort of chunk of money. It was different 20 years ago because it didn't cost so much money to go to university or whatever they choose to do. But I just want them to have something when they turn that age. So there's a thought that, so my children are 10, 8 and 5.
So that's a nearer term goal than your retirement then?
Yeah, so I need some money to give to them then. Or if they make it as football players, they don't need the money because they'll be earning their own, exactly. Yeah.
What do you think about, I want to talk about pensions, what do you think about the state pension and how that's going to pan out? I mean, it seems to me that the state has been moving the responsibility for all kinds of things from the state to the individual. And I think pensions and all the pensions reforms that we've had recently are on that track. So giving people the choice at retirement about whether they buy an annuity or whether they stay invested or whether they buy a Ferrari or whatever it is. What's your feeling about pensions and the way things are kind of headed?
The more people I talk to about it, the sort of more the less faith I have in 20 years' time if there'll actually be anything there. I mean, it's such a small amount of money now if I was to retire now. So, and the population ageing, is there going to be any money left there at the end of the day? And is the retirement age going to go up and up? It feels like it's not going to be there. So when I look at my pension calculations and how much I've got and how much I need to have in my pot, which is very scary when you actually look at those numbers, but I almost ignore the state pension because I'm not putting any faith in that being there. I'm just making sure I've got enough of my own set aside. So that if there is any state pension, that's just a bonus.
And are they company pensions? In other words, are they things you paid into when you were employed? So
yeah, I had a few pots from 2 different employers, and I consolidated them with. Am I allowed to say the name of the company?
Of course.
With Pension B. And now I'm self-employed, so I should put more money into my pension fund, but I will admit it's.
What's preventing you? There's obviously something on your mind about it.
There's when you are self-employed, it's the pension contribution is almost like the bottom of the pile of money I'm putting aside. So I prioritise putting money into debt repayment and savings, and I prioritise investing in the business, which is another form of investment, a very, very particular investment.
Yeah.
But then at the end of it, it's like, tax as well, or something.
Of course,
money aside for tax, and pensions like the bottom of that. And I need to almost move it to the top because I've got that 50,000 set aside, but as we know, that's no way enough to. I think when I've worked out how much that's worth a year, if I was retire at 60, 65, it's I think 5,000 a year.
Yeah, and that comes down to this question about what kind of lifestyle are you expecting when you retire, and what are the other things you talked about? Property, of course, and traditionally lots of people have depended on downsizing their property in order to release funds for their retirement. I was just thinking about my pension. So I have a company pension as I'm employed, but also took the opportunity some years ago to take out a self-invested personal pension, a SIP, where I choose my own investments, which is a little bit daunting because it's your name above the door, you're making the decisions. But the interesting thing about it is under the current pensions regulations is that for everything I contribute, the government contributes as well.
Yeah.
In percentage terms. So actually the money that I'm putting in, I know is working as hard as it can for the period that I'm going to keep it in my pension. Yes, I'll be taxed when I take it out, but I've had the benefit of that money being in the market, as it were, being invested for me. So whilst pensions regulations are really complicated, there are maximums and minimums and all kinds of detail about what you can and can't do. Actually, for me, the fact that the government is sort of helping me along the way makes that monthly contribution not feel quite such a hard decision, if you see what I mean. It's that you're sort of sharing the. Yeah,
I've been writing quite a lot about money mindset recently, and how you grow as an adult and have a particular way of doing things with your finances, and it almost needs to flip earlier in life. So I lived through my 20s. I didn't put any money into a pension in my 20s. I was employed at a time where you weren't.
Didn't have to have one.
Didn't have to do it.
Yeah.
And I remember I was working for Tesco's in a really well-paid job, and I remember making that decision. No, I'm not going to put that £150 a month into a pension because I can't afford to. And because I was in my 20s, it just seemed such a long time away. So I get why people don't see the importance in it, but it's probably my biggest financial regret that, and I daren't even think about how much money I've lost from my pension pot because of that 5 years worth of employment where I didn't contribute the pension there. It was just because I couldn't afford that small amount. I couldn't afford.
You couldn't afford in your mind.
It's the money mindset of putting that money away for the future, and yes, thinking about the extra money that your company is going to give you, the extra 20% that's going to come from the government, and thinking more of the future, because now, aged 41, the impending age of retirement is not that far away.
Yeah, do you think it's ever too late to start investing?
It's never too late, but you're going to have to put bigger amounts in. I mean, and that's probably what scares me, is and I've looked at some calculators to see how much money I need to have set aside, and I need to be investing, we're talking hundreds each month, into my investment pot or into the pension, and that is very scary. But if I want to get to that place where I want to have that money set aside and that financial freedom, then I have to do it. And I have to just start doing it and get used to it. Like, I've invested in a stocks and shares ISA my entire adult life. My first job was working for HSBC, and one of the first things I did when I worked for them was set up an ISA. So I've always put money in every month to a stocks and shares ISA, so I've got used to it, and that's just my behaviour now.
That was one of the questions I was going to ask you about, actually, is that kind of monthly habit versus thinking, I need to put in a big sum now. I think for me, this idea of being able to contribute monthly just takes some of the sting out of it, takes some of the scariness out of it, because actually, what I did was if I got a pay rise, for example, rather than putting in my head that pay rise is for, for just spending now, I can put some of that away. It didn't feel like I was losing out. And things like ISAs, I mean, it's a great example where, again, the government's helping you from the point of view of the tax situation with ISAs, and that you're not going to pay capital gains tax, you're not going to pay any more income tax on the things that you put in your ISA. It can help get over that problem of, do I need a lump sum right now, or can I actually afford just to put a little bit away every month that builds over time?
And that's almost like the first thing that then leaves your income, isn't it? Is that money's just gone, savings put aside, and then you then go into your normal spending.
Yeah. So just before we finish, just thinking back over the time that you've had these financial goals, have you ever changed, maybe thought about changing your goals?
Yes. So last year we thought about relocating to a different part of the country to save some money on a mortgage, just to make life a bit more comfortable with our monthly expenses. This would have allowed us to pay off debt quicker. And this time last year we had £15,000 worth of debt. And I wasn't bringing in enough money last year, but then I changed my mindset. I was thinking, I was limiting what I could do with my business, and I just had a revelation and changed that mindset of, took the house off the market and we didn't sell the house. And I was like, no, I'm going to make this business work. I'm going to make it generate more than enough money to pay off the mortgage as it is at £1,000 a month, and to put the £500 a month I need to put into pensions and investments and get all of that debt gone. So it was almost like last year was a bit of a defeatist attitude with my goals, and then I switched into, now I'm going to knock all of this out of the park and put lots of money aside and not relocate and uplift our life to change the boys' schools and make new friends and everything. So
that's really interesting. Thank you for sharing that with us. So let's just sum up then. So the three things, sort of three top tips, if you like, for thinking about financial goals. There's something there about mental attitude, isn't there? Just getting on and doing it. What else would you say are the top tips for financial goal setting? I
think it would be to think about when you want to get at that money. So, and having a good strategy for how much in cash for the emergency funds and stuff you need to get at. There's also having a pot for treats and the luxuries, like having that pot for holidays. And then is there a shorter term goal? Like maybe you want to put some money into an ISA for 5 years down the line, or maybe there's something for 10 years down the line, and then maybe there's something for pension, so 20, 30 years down the line. It's having a different form of strategy for each of those different points of life. It would be, another top tip would be to try and get your money mindset into the way of investing in yourself first. So that monthly money that I've been putting into my stocks and shares ISA for 20 years, I'm just used to that. So get into that mindset of putting that money aside first, and then you almost don't realise it's gone. And make the most of pensions. Don't do what I did and not put money into a pension. I know that you're not forced into doing it, but you're very encouraged into putting money into your company pension. But do it. Don't miss out on all the money like I did in my 20s.
Lynn, thank you very much. Okay, well, that's all we have time for this week. Thank you very much for watching. Don't forget to subscribe to the channel to see more. And of course, you can watch all of the Steps to Investing playlists in the channel as well. Thanks again, and we'll see you next time.